All right, good morning. Let's start round two, second half of 2021. So things look pretty bullish. I guess, the market by the dip continues. And, what I've mentioned as flies in the ointment in our newsletter, those flies, other than where they're, I guess, attacking like the transports and materials and a few other sectors, other things look good. And as I mentioned yesterday, if this Russell 2000 can break out, I think it's got to be the big winner or the place to be for the second half of the year. Yeah, so I don't know about rotating into the transports, McGraw. Maybe. Look, the way this market has been, I wouldn't bet against it, but we need to see some type of a pattern that supports that belief, which we don't have yet. So if that was to be the case, and even if it's industrials, which got whacked too, if that was to be the case, we should see the 10-year and the 30-year yields start to rise again, because what you're suggesting about money rotating back into that would suggest that what happened there, as it was looked at, turned out to be a mistake, meaning the move down and the 5-year popping up and even the 3-month moving up. And I see no real pullback there. So as long as they're stable, those short-term interest rates, it'll be okay. But infrastructure bill, well, you know what? Maybe, McGraw, that's a moving target. We're talking about, making our own decisions based on what politicians are going to do. I mean, if we do that over the long-term basis, we're screwed. We've got criminals running the show, and we'll see what happens here. Anyway, at the moment, looking at things for Thursday, we start with another rejection of 4,300, and pushed up there, and coming back in, we got a breakout failure and the beginning of a turn here. So an initial failure on the S&Ps, and we see that pretty much across the board, which suggests, at a minimum, sideways choppy action today, or a retest of some lower level, which really wouldn't be a big deal. We've got yesterday having tried to make a dip in the futures, and it came back up again, and today initially rejection. It's early, so we'll see if this moves down. Maybe it turns out to be another green bar. There's this big open interest that's sitting up there at 4,300, which is going to be proved to be resistance, besides a whole number, and besides the fact that it's up multiple days in a row and momentum is slowing down, and so on. So it just makes sense to be cautious on the long side for a little while here. Let's take a look at the spiders. 24 hours, and they look a bit different. And so, basically they've been in the same place for 3 days. And yesterday, well, you can look right here. Did it make a new high? Yes, it did. Right? By about 20 cents or so, it got above the prior high and then got rejected. But, as we've been reviewing this week, I've said multiple days, our first reference point of support is the prior day's low, and that hasn't been violated yet. So put an alert under yesterday's low, and we shall see. If that breaks, that would open up the door to some type of a pullback within an uptrend that should be buyable. And the weekly still looks good. That red bar was ignored, and we got bottoming tail bars. So the markets, as far as the S&P goes, have been in a trading range now for several months, consolidating the gains from the corona low, that low down there in November. There was a little correction that went on there. Now, this has been a longer one. And so the prior week's low is going to become extremely important, that any pullbacks within the daily time frame should stay in the upper half. The bodies should stay in the upper half of last week's low. Consolidation building energy for a blow off top. It's possible. Now, I think, Bernard, that question could relate more to the daily time frame and what would happen there, as we go into the beginning of next month, which is supposed to be bullish, the end of a month, beginning of the month. What I would want to see is a type of correction bar up here. So we're not getting a gap down of any significance here. And things are actually kind of flat, not really not doing much in initial rejection here. But what we would want to see is some type of attempt to go down and immediately come back up again. So even if that was the case, that the daily time frame, this turned into a measure type of a move, and it really got extended on the daily time frame, would the weekly time frame make us think that it's a blow off, or would it just be a continuation of this bullish 180? So as you look at this from the perspective of multiple time frames, even if we did get an extension to the upside on the daily, it would just be even more bullish on the weekly. So the only thing that's going to change, and when we use the word blow off, of course we could apply that to any time frame, but as we look at this from an intermediate term perspective, even if it was to get a type of blow off move on the daily time frame, it would just be a continuation of this bullish reversal on the weekly. So it really would not give us any long-term bearish view, and only in the short term to think that prices are likely to more definitely retrace, where this looks like it would be a minor retracement. If we were to get a continuation bullish move on the daily time frame, common sense says we're going to have a bigger correction, either sideways or down. Qs have been leading the way. It seems more likely that some money might rotate out of this since it's made such a move. And you can see on the weekly time frame, it's just been moving up here. So we might see, some of these NASDAQ stocks consolidate the gain, normal. And the futures, my NQ chart, you could see this initial rejection here as it popped up and it came back in. So at the open, we've got a little bit of bearish price action going on here. We've got yesterday's red bar, the initial rejection. So momentum is slowing down, and not a big deal because it's moved up so strongly that, unless it was to retrace, deeply down here, it's really not going to, move us away from an intermediate term bearish view unless something significant happened. And so right now it just looks like momentum is going to stall and probably get some pullback or choppy action going on here. And I think, as we get into the middle or end of next week, I think things will become clearer as to that. The Russell is hanging up here at the highs so far. Does the long holiday weekend ahead play a part? Only from the point of view of let's enjoy it. I don't, over the longer weekend, I guess that just opens up the possibility for something to happen while the markets are closed, and we'd have to deal with that when the market reopens. But it is 4th of July, and I suppose that particular day could be a target for somebody that doesn't like America to say, hey, let me ruin the party. But that's just, who knows, a speculation. But you asked the question and it produced the thought. I didn't think about it until you asked that question related to this particular weekend. But as I said yesterday, this has done pretty much nothing all year other than just chop and chop and chop. And this really is set up, if it was to break out from here, to be the big winner in the second half of the year, since it's been the underperformer. We'll see. You can see that bullish 180 there. We want to see this bullet, have bullish price action in this area. So far, it's holding up pretty well. Oil. It just keeps marching ahead. Pushing up through 75 now. And I suppose, just looking at this chart, unless this breakout bar turned into a topping tail or that low got taken out, this type of consolidation, whether it's oil or anything else, would suggest moving up, to like the next whole number, $80. So step by step, does it break a prior bar's low? Does it break down? This isn't marked as a pivot yet, but after, Friday, it will be, and that'll become major support. So this continues to look higher, continues to say that it's going to cost more money to fill the gas tank. It's going to cost more money as it relates to products that need oil, and it's going to add to those inflation concerns. And so as we see something like this, then looking at, corn and soybean and metals, if we see, those things that pulled back, if we see them starting to push up again, well, that's going to reignite the inflation concern. So we'll deal with that in the second half of the year as it unfolds. Now, gold, yesterday I mentioned the potential for a breakdown bar failure, and we're getting exactly that. How high could oil go? Until supply increases and people start selling it. But from a technical point of view, now that this is a continuous contract, it's up at this level here. And this was that crazy time where it went negative. So, $100, that's a void. Look at the way it came down. So, if it pushes through 80, I think it's hard to imagine oil continuing to push up like that it won't become a bearish influence on the broader markets at some point. But so far, the markets don't care about any of that. So we got this breakdown bar failure that is triggered by trading above this bar's high. And yep, we got plenty of congestion up here, but this is the beginnings of a turn on gold. It's in a downtrend, but this is a type of a shock pattern where this consolidation and breakdown suggested it would go lower. And this is not what shorts would want to see. And so, if it can get through this area, and a lot of times it does with this type of a pattern, it could make a very nice move up, I guess, to these converging moving averages. And silver looks even better because it didn't break to a new low, and we've got this reversal here So, it's already gotten through. There's a nice example of what we talked about in MT Live yesterday of relative strength. That's a good point, Bernard. Right? $100 oil. What about $80 oil? I mean, how high does it have to go to make deep sea exploration profitable again in a company like Rig, which used to be but $100+ is down, I think we looked at it yesterday. Single digits. This you can see that used to be a $170 a share company or thereabouts. So that's a very good point. That's where I think we spoke about this in the green room yesterday. Somebody brought it up as being a messy daily chart, and then we talked about the weekly chart and being at resistance and so on. So that's a very good point. All right, Bitcoin not getting any love today. Still look like it could go higher. Just consolidating here, so not so sure. We'll see what unfolds over there. And things like wood, right, which was, in the news, is big upward move, beginning to stabilize here at major support. So back to the idea of, the inflation and would rattle the market with interest rates and so on. So, we'll keep an eye on all of that. That's what we do. Right now, the 30-year is kind of hanging here. Does look like it could go lower, which is not going to be a good thing. If it does, from a bullish point of view, what we want to see is this start to move back up. And this 5-year, as it popped up here, sideways, it can just stay here. But if it starts spiking higher, while that 10-year and the 30-year and the 10-year, if that starts to drop, and then we've got the 3-month, which has popped up here. You got to keep an eye on that, because that is what's going to ruin the bullish party. If these shorter terms go up and these longer terms come down. All right, and the transports there. They really don't give us much inclination, but we know that, the airlines have been doing poorly, the cruise lines have been doing poorly, yet this is kind of going sideways here. So a lot of things to keep an eye on, as always, as we go into the second half of the year to see how things are going to be moving. And that's what we do here every day. All right. All yours, Dan.
Oh, sorry, the other mic was off. All right, good morning. Yeah, so on that Bitcoin and other countries going after them, whatever, it'll be interesting what happens when China gets their cryptocurrency out. But China here, FXI, they're doing some saber rattling against the US, saying you better play nice. So with Bitcoin, Riot, I want to watch on a pullback. Had a nice breakout. We nailed that. Today's Thursday. On Tuesday, we nailed that nicely. All right, our two problems children today. We had a call spread on Airbnb. It's gapping over. That was a very, very powerful bar yesterday. So we'll look at, we got to just go to our default here, 30-minute high out of the gate here. Look at this incredible run from right at noon. It just broke out and nonstop. So we have it in each letter. One of them was to just buy the stock. This was a setup where I said, if it trades over these highs, buy the stock. And now we got a covered call on our hands. And then we'll like I said, I'll watch a condor on the other one. Let's see, Netflix, I have a down alarm going off. We did a call spread on this on the afternoon breakdown. So that's showing nice relative weakness here too. That's good. And also cat. It was breaking down yesterday morning. We did a call spread and closed strong. So we'll use a 30-minute high on that. Everything else looks fine. On Google, if I could get over the highs, that's still fine for a put spread. I doubt it. Looks like it's going to do it this week. On snow, we have a call spread for tomorrow. It's opening flat, so if it's opening flat, then that's good for our just overnight theta. On Williams asking about GME. It's a watch. For directional, I'd wanted to get over Tuesday, the Monday's tail, but I was also looking at AMC. I'm gonna set an alarm AMC 58. I like AMC better, both as a directional and put spread, just because it's higher up and above the 20. Let me set the alarm here. Cliff, yeah, Cliff Clavin, deep retracement, but retest here, gapping up to 22. This could be a 30-minute high. I know we've been watching the XLB stocks, but when you get something like this with a big void, just like the breakdown failure showed you in GLD, if this breaks up, our NUE stopped out break even yesterday. Look at a Moss. Look, that's a retest with a bullish close with a price void. So this is a great put spread idea, or 30-minute high day trade. Matul Roku. You're fighting a beast, but using the pre-market data, gapping down and bearish with a big price void. And I don't mind shorting the beast, but you just got to know what you're doing. Did I just see Airbnb drop $2? Yeah, look at that. All right, that would be helpful. LZ, this is a legal Zoom IPO yesterday. So we'll keep an eye on that. Dunking, remember when the short seller came out to close this gap down and then it ripped, went sideways? This was a good long entry right here, although the target wasn't real big. But this could be a put spread idea. SPRO gapping up. All right, so there was absolutely no pattern here. Now it's gapping up. 17 bucks. Gap's too big for me. XOP, I was watching oil, and that's gapping up. It's bearish reversal at a top, but notice the weekly was still a bullish 1, 2, 3. So that's a very important concept of multiple time frames. And now it's gapping up and breaking out. There might be some oil stocks we can play with. Aurora was gapping up over this. Wow, it's gapping pre-market up way the heck up here, but now it's giving it up. So I'm not excited about it. OIH. Yeah, there's no pattern though. I mean, it was actually a bear 1, 2, 3. It was the weakest. Remember yesterday's session in MT Live? This is the weakest of the 4 oil ETFs. MRO, yeah, that's 30-minute high. That looks higher. That's a bullish gap. It was a big mess, but you know, look at the weekly now. The weekly bar trades or finishes tomorrow, but that's a 1, 2, 3 right there. Wow, tick 1200. Our rig, we shorted naked puts on this for Friday. Look at the, you know, breakout. You know, we just did that as a naked put trade. Let me see where we're at on that. Rig. All right, we shorted the $4.50 puts, and now they're 5 cents by 7 cents. I'm shocked actually they're that big for tomorrow. That's still a big premium for $4.50 right here under yesterday's low. So see that's an example where I'm not going to close mine. I'm just going to leave them open and try to get full profit on them. CPSH was a long watch yesterday, and then it just ripped into the close, and I didn't want to chase it, but that looks good. Daily, weekly, monthly. CCIV, same. You know, we said to buy it if it closed strong.
Walgreens getting smacked. We were looking at this yesterday and it held up.
Ooh, yeah, it had earnings.
No, there was some news.
No, it's
I don't think
earnings.
it was earnings.
Yeah, it was on my earnings list here. Yeah. Yeah, it is earnings. Yeah. All right, FCX. See, we were looking to short some of these materials, and see now they're not going through. So let's cancel FCX. Spiders here at the high. Wow. I mean, going sideways for 2, 3 days and gapping up and green in a bullish pre-market at all-time highs. This looks higher to me, folks. I mean, it's just not a no-brainer entry, but it looks higher. Let's see, we also had cat. All right, good. Yeah, we were short the 220s, so they're still out of the money. LAC, let me set an alarm. Like 14.95. I like that over 15 bucks. BFF. Yeah, that ain't bad. You know, it's a deep retracement, but it came down in a fluid manner.